Hello, I'm Keith Lowther, your mortgage guy, and I want to talk to you about a way that you can win in today's rising interest rate environment. You can shave years off your mortgage and create wealth. This is the untapped potential of refinancing. Now, refinances still make up almost 1/3 of all mortgage transactions, even though rates have risen. Now, you may be wondering how this can be. Many consumers have amassed a large amount of debt, paying much higher rates of interest thanks to the Fed hiking rates so aggressively. And many of those individuals are only making the minimum payments with no path to paying off their debt. At the same time, most homeowners have record levels of equity in their home. Many homeowners are benefiting from a type of refinance where we pull that equity out of the home to pay off those debts, saving money on the overall monthly payments, and still leaving equity in the house. And additionally, there are ways to gain additional equity at an accelerated pace and significantly shorten the length of your mortgage by applying these savings as an additional down payment or an additional payment each month. Now let's go over an example. In this example, we're going to assume that a borrower purchased their home in 2019 for $350,000. At the time, they put 10% down, and so they are paying mortgage insurance. Their current loan amount balance left is $288,738. Their equity, they have $256,203 in equity, and their interest rate is 4%. Now, I know that you're asking, why would you go from a 4% rate to probably close to an 8% rate with rates where they are right now? And the answer is, if you've also got a lot of debt, now is the perfect time to use this strategy to help pay off the debt, put extra money in your pocket. And in addition to the extra money in your pocket, if you want to put that towards the new mortgage, you can do that and save years on your mortgage, pay it off early. That could be worth tens of thousands of dollars to you. So what we've got here is the borrowers have some debts. And what they've got is they've got their principal and interest right now is $1,504. Taxes and insurance are $730. Now, when you add their installment debt of $935, revolving debt of $540, they're paying $3,709 between their mortgage and their debts. Now, with the new mortgage, they're talking about paying off all of that debt, not having any monthly payments for credit cards or vehicle loans, using that to ultimately end up saving them $386 a month. Now, what does that look like? Numbers here on this slide that's going to show you what the current existing mortgage is and what the proposed mortgage is. Now, look that property values have increased. 554,941 would be their property value at the moment. And if they took a loan balance at a new loan, $369,900, they could pay off the rest of that debt and pay off their mortgage early. So in looking at this savings table, what we see here is that with doing this cash out refinance, they're going to save $386 a month. They could put that money towards additional principal. Now, what they do if they put that money towards the principal and they're not servicing other revolving and installment debt, they would save 5 years and 7 months on their mortgage. That's 67 mortgage payments. 67. And we're going to go down and look, but just to give you a quick peek, that's $163,948 in additional cash in their pocket and equity that they would have in 25 years, which is what it would take them to pay off the loan. Right now has a little bit longer than that, but in 25 and a half years, they're going to have $163,000 in their pocket. That's huge. Now, yes, they went from a 4% rate to an 8% rate. The beauty of this is when rates do come back down, they still would have the opportunity to refinance if it makes sense for them. And they can factor in the cost of a refi and where the break even is. I can help you with that and walk you through all of that, show you charts and tables for your specific situation. So reach out to me. This is Keith Lowther, your mortgage guy. This is huge.